Good morning and welcome to Stock Market Today. It is Monday, November 12th, 2018, and I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. You can follow me on Twitter. I'm at Dan_Russo_CMT, and I am over on StockTwits under the same handle. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com and StockCharts TV. And you can head over to ChaikinAnalytics.com/today to sign up for a free email with stock ideas every day, and you'll be able to follow along with this show. So I hope everybody had a great weekend. The S&P 500 found support on Friday at the 200-day moving average, but still closed nearly 1% lower on the day. The NASDAQ and the Russell 2000 underperformed. Treasuries were stronger across the curve. The dollar was better against the euro and sterling, but down on the risk-sensitive yen cross. Gold ended down 1.3%. Oil was weaker, pushing further into bear market territory. WTI settled down 80 basis points, down for 10 consecutive days. Friday marking the 10th consecutive day. Risk off tone to the sectors when we look at outperformers and underperformers. On the outperforming side, consumer staples, REITs, and utilities, also healthcare. Underperformers, tech, discretionary, comm services, and materials. As we arrive at the desk this morning, S&P futures are little changed to slightly lower after finishing sharply higher last week. Asian markets were mostly higher overnight, with China a standout, up over 1%. European markets are largely on the defensive here this morning. Treasuries are closed today for the Veterans Day holiday in the U.S., and a special thanks to all of those who serve or have served. The dollar is seeing big gains versus both the euro and sterling, slightly stronger on the yen as well. Gold up 10 basis points in WTI. Crude oil up 50 basis points here today. Again, it's been down 10 days in a row. Here's the structure of the S&P 500 as we get the week started. There's the test. Intraday on Friday, pull back to test almost directly on the dot, the 200-day moving average, before rallying to close in the middle of the range on the day, but still lower. So we have tested the 200-day moving average. Support is in the 2760 to 2780 zone. Resistance comes into play at 2810 to 2830 zone. I didn't put it on the chart here, but if you look at a chart with a 50-day moving average on it, the 50-day moving average is all right around 2830. So that's why we've identified that level as the top of the zone. I didn't want to crowd the chart here today. The RSI is rolling over and it still remains in bearish ranges. So that's something that we're looking for. We want to see a shift in the RSI. As price moves higher, we want to see momentum confirmation. And when we see momentum confirmation, that gives us conviction that the near-term downtrend is reversing. Don't have it yet. But something we are keeping an eye on. On a positive note, Chaikin Money Flow Indicator has turned and remains bullish. So conflicting signals from our two main indicators. Bullishly, we can say the test of the 200-day is bullish. Money flow is bullish. On the bearish side, we did fail on Wednesday, right at, and then again on Thursday, right at the level that marks a 61.8% retracement of this entire decline. And for you pattern traders out there, of which I am not one, but I do pay attention, you do have a potential head and shoulders reversal setting up. You have to wait for these to confirm, and it does not confirm until the neckline breaks. Neckline currently at about 28.15. So just bear that in mind. So what are we talking about in our note to clients today? S&P 500 finds support at the 200-day moving average. We touched on that. Small cap stocks continue to underperform. And they cannot get any relative traction. We'll take a look at what's going on there. Oil closes lower for a 10th consecutive day. We'll see what that means. Also, what's interesting, though, is we're starting to see some bifurcation in the energy stocks. I think as a group, the energy stocks will trade lower with oil. However, they will likely turn before the commodity does, and the E&P names will likely turn before the services names do. That's just the general way it works out. Not guaranteed, but something to keep an eye on. Breakout in the U.S. dollar. Futures point to a flat open today. Power bars, not much of a change, really, from Friday. 6 bulls to 4 bears for the Dow, which was a slight outperformer. S&P 500 down 92 bips on Friday. 73 bulls to 81 bears. NASDAQ 15 bulls, 18 bears, down 1.66% on Friday. So an underperformer there. And there's your small cap underperformance, down 181 basis points, 211 bulls, 432 bears. That group remains bearish. Here's your uptick in bonds, which sent yields lower. 10-year yield tested tested resistance at that 3.23 level. Does have support at 3.1. Also at the rising 200-day moving average. If yields come in, bond proxies will continue to do well in all likelihood. According to the Chaikin Powerball, small cap stocks are more bearish than large cap stocks. Major indexes are mixed. Our stock of the day today is Ofg Bank. If you've received that email and you're following along at home, this will be the stock of the day. The stock of the day is auto-generated. I do not pick it. We have an algorithm that picks it based on our proprietary Chaikin Power Gauge, and today is OFG. 1825 last sale, up 2.6% on Friday. Big outperformer. Power Gauge rating for OFG is very bullish due to very attractive financial metrics, very strong price volume activity, strong earnings performance, as well as positive expert activity. Let's take a look at the chart here. We have a very bullish stock, strong trend, weak industry group. So let's run through the analysis. It's been bullish or very bullish for most of the past 12 months and predominantly has been an outperformer since late January. Outperforming now. Dynamic duo in gear. Market and model are in agreement. This is interesting to me because we're rounded out of an overbought condition and never made it to oversold before turning higher. Chaikin money flow solidly bullish, and we have a breakout here. I think you buy OFG. I like OFG. I'm a trend follower. I like breakouts. We're not overbought. We are closer to overbought than oversold. The way I like to trade these breakouts, though, just with the market being choppy, I think you need to take your breakout signals, but you need to tighten up your stops a little bit. You know, if this stock pulls back into the range and breaks below $17, you probably need to reevaluate the position. But I like the breakout here above resistance at about $17.75 to $18, closed at 18.25. OFG on the long side today. Our sector tracker, we're looking at the movement over the major sectors over the last 5 days. And you can see as the market kind of hit resistance, look what's back at the top of the list. We thought that the weakness in the defensives was counter trend in nature. That is playing out. Healthcare, real estate, utilities, and staples, the top 4 groups, while comms, energy, tech, and materials are the bottom 4. Keep an eye on financials. They have a solid power bar ratio within Chaikin Analytics. I think parts of the financial sector are worth taking a look at. We made CBOE our bullish stock of the day today. I think you can look at some of the solid insurance companies in that group as well. Our industry in focus today, Semiconductor Services. It should not be a surprise to anyone. We've been bearish on the semis for a while. For those of you who subscribe to our Bearish Insights note, comes out every Wednesday, the semiconductors were the subject of our Bearish Insights. As they are you've seen the chart on here a bunch of times. Semis are a relative underperformer. I went on Bloomberg TV on Thursday and highlighted the underperformance in semis and said it was a group we wanted to continue to avoid. And you can see why. Look, over the past 6 months, semiconductors have underperformed by nearly 8.5%, and that power bar ratio, which, as we always say, measures future potential, is very weak. Group is currently ranked number 19 of 21 subsectors. Look at this, 14 bearish stocks, 1 bullish stock. Some of the indicative names, some very bearish rated stocks within Chaikin Analytics. In the Semiconductor Services group, OLED, Universal Display, Qualcomm, QCOM, and the very bifurcating and one that's on everybody's radar screen, Advanced Micro Devices. So because of that, let's take a look at it here today. And I always urge people, it doesn't matter what the stock is. Follow the process. Follow the process. AMD is a widely held stock. It's widely watched. It's had a lot of volatility. But let's look at it objectively. We use Chaikin Analytics and we use a process to take our subjectivity out of the equation and look at stocks in an objective manner. And what do we have? We have a very bearish stock with a weak trend in a weak industry group. Are the market and model in agreement? Yes, they are. Here's our very bearish rating, and we've been underperforming since the end of October. Dynamic duo is in gear. Stock is hitting overbought levels based on our overbought, oversold indicator. The one flip here for bears is that money flow has been predominantly positive. We had a slight character change here with the sell-off, but we're back to positive again. So what I think you want to do is if you own AMD, I think you have to maybe use this rally to lighten up your position in AMD here today. If you're looking for a bearish setup, I think you can take the bearish setup here as the stock has failed at the 21-day moving average in the middle of our volatility bands. But just be aware of the fact that this is a widely held stock. There are dogmatic views out there, right? It's like a Tesla. It's like an NVIDIA. It's like a Netflix. Just, you know what? Keep it on a tight leash. You know, tighten up your stop a little bit if you want to trade to the downside in AMD. But if we're looking at it objectively, AMD sets up really well as a bearish trade idea. Ticker symbol AMD on the bear side. Let's look at what's trending. Friday's S&P 500 movers and shakers. Monster, MNST, up nearly 5% on their earnings announcement. Was also added to a conviction buy list at one of the major sell-side banks. What is it? CL, Clorox, up nearly 5%. Just defensive stocks leading. NRG up on earnings. EQT and APA, I didn't really see a lot of news flow to lead those stocks to be outperformers. PCG and EIX, both down hard on Friday and both down in the pre-market today, and it is a function of those fires. I'm sure everybody's been watching the news and sees what's been going on in California with the fires. And, to our clients and our listeners who are in California, more than anything else that's going on in the market, hopefully you and your families and your loved ones are safe. Quite honestly, you can put the market aside for a little while. Hopefully you are safe there out in California, but those stocks are trading off because of the fires. Activision down over 12% on earnings. CenturyLink CTL down over 10% on earnings, and Skyworks down on earnings as well. Concerns about phone units, right? We've seen some negative data points out of Apple regarding units, as well as China. We've seen some negative data points on China coming from tech, as well as consumer discretionary. Skyworks caught up in that mess, down 8%. Friday surprises, SRDX, Thermonics beats by 6 cents. Ubiquity Networks, UBNT, beats by 34 cents. And Tribune, TRCO, beat by 8 cents. And that stock did get a positive shout out from Mario Gabelli on CNBC last week. So let's look at what we're talking about with our clients today. Here's that small cap. You've seen it before, the IWM relative to the SPY. Breaking support once again. On a relative basis, we are now below support once again, below the 200-day moving average, which is beginning to tick lower. Maybe we're building a base here. Maybe we're not. I don't think you want to press. I don't think you want to press shorts in small cap land relative to large, but I think maybe on the long side, you want to give some time for a base to develop, especially because on an absolute basis, we are once again rolling over and likely to test support just below 150 on the IWMs. Oil closes lower for a 10th consecutive day. Tried to break out above 74, and then from false moves come fast moves. And now we've broken below 64. Rallies back towards the 64 level should be treated as suspect. Deep oversold condition likely leads to an oversold rally. Below the 50-day, below the 200-day, both beginning to turn lower. Shake and money flow for crude oil, very bearish. Could have bearish implications for the energy sector, as I have addressed. However, I think you want to watch crude here. Any rally back towards 64 should be treated as suspect here, as there is solid resistance at that level. I do not think you want to go bottom fishing for energy stocks just yet. And part of the reason I think that the commodities have been weak and oil's been weak is look at the strength in the dollar. Here's the U.S. dollar index breaking above the August highs after testing and holding support at the rising 50-day moving average. And we do have a shift here in the RSI to bullish ranges. Here's CBOE as our long idea, bullish stock, strong trend, strong industry group, oversold, outperforming the market with bullish money flow, tripped and oversold buy signal today. Take a look at CBOE on the long side. And that's it for today. Head over to ChakinAnalytics.com/today to sign up for your free email, daily stock ideas, follow along with this show. And if you like what you're hearing, help us spread the word on social media. Have a great day, everyone. Talk to you tomorrow.